Good morning, everyone. Welcome to the London session. I am back to London, obviously. Traveled in last night, and today I do have some roofers in here, so we're doing our roof, and you can hear some banging. Quite possibly. I also have all the 8 dogs in the office at the moment. So yeah, it's going to be certainly an interesting day. If you're here for the first time, welcome. My name is Deeyana Angelo. I'm a Series 3 licensed trader. I specialized in some of the more alternative markets. So things like precious metals, energy markets, so crude oil, RBOB, which is gasoline futures, and natural gas. At the moment, I'm looking at gold. Now, I don't know how much trading I'm going to be doing today. It is a short day, so you have a couple of things happening today. First one is, like someone mentioned, Happy Trump Day. So it is Trump inauguration day, and it's also Martin Luther King Day, which means we have a short session overall. Everything will be closing by about, I think it's 6 p.m. our time over here in Europe or in London, and I think it's 7 p.m. in sort of Central European time. So yeah, be careful. We might have either some zombie rallies going on in equities, just purely drifting higher on lower volume, and similar things might happen in some of the other products. So let's have a look at some of these levels on gold, because gold looks pretty decent this morning, even though we're not really having too much movement currently, but hopefully things will liven up a little bit into the overlap. First, let's do a little roll call to see who we've got here. Obviously, we've got Bruno, who has just posted our risk disclosure. Now, even though I do have Series 3, this is still just for education purposes only. And I can see the question that we get all the time: why is this called the London Open? London Open an hour and a half ago. Yes, you're right. I never trade the London Open, pretty much because this is what you get. You don't really get much. In fact, if you look at most products, Asia is arguably a bit more livelier on these products that we currently have on Topstep than what London does. We're working on getting DAX over, which is more appropriate for this session, where you do have quite a lot of movement. You also have the German Bund that also can move pretty well, but neither of those are currently available. But like I said, we are working on it. And if you want to upvote that, let me see if I can find that link. I'm going to pop it in the chat. So one of the reasons why I don't do the London Open is because I never trade any sort of an open, right? I look for, first and foremost, the extensions of the initial balance. Now, initial balance is not even done after the first hour, right? So you get the high, you get the low, and then if we get something outside of that, I become interested in trading it. They called it the London Open for some strange reason. I wanted to call it the London Session, and I think we're probably going to be changing that at some point. Maybe call it something else, London Session or Euro, or something that might be a little bit more appropriate. But yeah, generally London Open is nothing like New York Open. Nothing goes crazy. It's all pretty muted and quiet, right? And that's actually something that you don't want as an intraday trader. You want markets at the time of day when they're really, really moving. Sometimes you can get London doing odd things, but that is an outlier. You can have a trending day as a result of some sort of headline risk, but that's not the norm, right? The norm is that we are in a quieter period. That could be actually not a bad thing if you're trading something like, for example, NASDAQ. It moves over 1,000 ticks per day, and actually some people find it a little bit more acceptable during the quieter session during London. It still can offer you a decent range in some days, but again, just be careful that the VWAP is sloping somewhere. We're talking about Globex overnight VWAP, of course, not the session VWAP, because again, it's very, very early. So you want to see some sort of volume. You want to see some indication that there is an imbalance of some sort on the day. What is imbalance? A trend or, dedicated movement. So with that in mind, today I do have 27.45 as a level of interest on gold, which is just above the overnight VWAP, and I would like to see an extension of the initial balance before I do anything. That would be the first level to look for. Any kind of long trades. If we dip lower, that will give way to a bit of a gap fill because we're opening above value from Friday. If you're interested in the value high from the London session, that's sitting at 2739.5, so a little bit lower than where we are right now. And both of those areas would be interesting to me for any longs. Now, if we start to break down below those, obviously that opens up the possibility for a value acceptance trade and further downside movement. Let's have a look at the large time frames. It is Monday, so it's time to begin by looking at that bird's eye view to give us an idea of where we actually are. So the first step is the weekly chart, and as you can see, we have an established range. So if we take that this is the high at 28.28 and that this is the low at 25.68, that's what you're working with. And right now we are almost at the top, not quite, but almost at the top. So anything up to about 27.69 would be my rough intraday target for longs. And if we start dipping down, well, I would actually like to see it a little bit higher before we start fishing for longs, for shorts in gold. Now, when it comes to projected ranges for the day, they're pretty far. I have a projected upside target of 27.81 from that expected volatility today. And then I also have another level from the options activity at 27.35, and then all the way down at 27.15 is where I'm looking at the downside potential projected algorithmic range. So yeah, it's in the middle of nowhere at the moment, so we need to wait and see first and foremost what they want to do around 27.45. So yeah, let's have a look at who's in the house. I saw Dan Trader was in here. You're always in the chat. Do you sleep? Do you ever sleep? And if not, how is it that we see you all day long? It's absolutely amazing. We have Trap Card saying it's been kind of slow and choppy. Hope London session gets me past. Yeah, it could happen because, like I said, it can be a little bit slower depending on how much you got to go until the target. Just take it slow, right? Just size down and don't rush. Rushing is the worst thing you can do in this line of work. We have Alex LPA saying good morning. We have What is the Crime, Kitten Socks, Dayspire Live, Sushim, Wes, Raven Noss, Crazy Gamer, Nanka. Good morning, everybody. Okay, let's have a look at some. Oh, you have Thomas Winton saying, hi, do you love the red hair? Thank you. Caused me some trouble at the airport, actually. I usually don't, I just usually walk without any problem, and I'm usually in business class for the European flights. However, they were still, that I lost my luggage. They decided to take it away from me at the gate, and they were like, oh, you have to put it in the hold. And I was like, what? What are you doing? I also got stopped to get asked where I'm coming from. Never happens when I have my normal balayage hair. So I don't know, fashion colorism must mean that you're like a drug dealer or something. So yeah, I don't know. I'm kind of thinking Is the red hair good? I'm still not sure. I used to have red hair when I was much younger, but maybe I'm a bit too old for that now. Dave Sparrow Live says, Dee, would you be so kind to talk a little bit about some of the different economic events during London and how you treat them? Now, for these particular products that we have, it is kind of unlikely that you're going to get a massively big move. The only thing that can move London, gold and all of these products that we currently have here, it would be something like an ECB rate decision. And I do believe that we had that recently, so I think we're okay. Same thing with Bank of England if you're trading the currencies, even though I don't, because I think they're very, very quiet. And I just don't like the movement that is non-existent, and then you just end up in a trade watching paint dry for about 3 hours. I look for more volatile movement, which is why I like trading DAX, right? During London, DAX is considered the main session. And, fingers crossed, guys, that we're going to get DAX at some point this year. That is one of my main products away from prop accounts and stuff. And, I've even traded DAX on other prop. But yeah. So we'll see what happens. But let's carry on with the questions. How do I treat economic events during London? I don't pay that much attention. Like I'm aware of them. I will look at the calendar to see maybe, sometimes ZEW, which is the German sentiment, economic sentiment, can cause some movement in DAX. But again, it's not going to be like a CPI or PPI where, the release comes out and everything whips around, giving you massive momentum, massive move. It's not quite like that. It's more muted. There's a little bit of kind of like a jerky momentum, and then, they sort of decide what they're going to do. It's very rare to see, some enormous movement that goes within 3.9 seconds, right? It's just not a part of London. So yeah, when it comes to economic events, especially if they're coming out of smaller countries, like Spain or, Italy or something, they almost have zero effect on price. So I focus on the technicals and I focus on the levels from the options activity, the value areas, and what we're doing with the auction process and the initial balance on the day. Crazy Gamer is asking, does London open at 3 a.m. or 4:30 a.m. EST? It actually opens at 3 a.m. EST. So yeah, it opens about 90 minutes before I start this stream. Like I said, because I don't trade the open. So I wanted to at least have the session going and the live stream going when we might get the movement that I'm looking for, and that's never during the initial balance. So, if we had it for the London Open, I would never do a trade. I would just be here going, hello guys, blah, blah, blah. And, even now there's still a lot of talking because we're still waiting for movement, which is good. It allows you guys to ask a lot of questions about the logistics of passing, about, stop loss sizes, about targets, strategies, and all of that. So it's not necessarily a terrible thing that we get this chance to really analyze the levels for later in the day. And, there's a silver lining in everything. Okay, so next question is from Gianni Peroni. Says, good morning. Where can I find gamma exposure for futures? Well, the cheap way of doing it, the free way of doing it, is just to have a platform that enables you to look at the options chain. But obviously, there's quite a lot of data there. Unless you know what you're looking at or you're looking for, it can be a bit difficult to sift through all of that. So most of us will have some sort of a service that simplifies that data. Personally, I like to use Mentor Q for that. In fact, me and Anne-Marie had a webinar towards the end of last year with Fabio and Patrick. And it was a very, very interesting session, very interesting and informative webinar where we explained a little bit how we use those levels, why they're important, and what we want to look for. Now, these levels are not kind of, oh, yeah, we definitely go long from a gamma wall. It's like any other level. It's an orientation point where you want to look for either a support, so like some kind of a defense of the level, or a breakdown of the level. Now, of course, some of the levels carry certain statistical probabilities in them. Like, for example, the gamma walls, if it's, let's say, a former call resistance, there was a lot of calls there, we went over that, that is pretty bullish, right? So we want to see some more buyers stepping in. If you have something like a high volume level, HVL, that could bring you a change in sentiment intraday. Let's say we start off slow and then we bust through one of those HVLs, you can get a gamma exposure change on the day where you bring more volatility or even less volatility on the day. Let's say that we had a massive day in which we're running into HVL, we cross over it, and suddenly everything dries up. That's because we suddenly went from a high volatility exposure level to low volatility area, and you can kind of use it to adjust your strategies intraday. So yeah, I use Mentor Q, and I just, simplify everything down to a single line on the chart. I know that Nick for a Tick, I think, uses TraderAid for SPX levels, but the reason why I like Mentor Q is because they have a lot of alternative markets that I'm interested in. So, they have levels for natural gas, they have levels for gold. Most of the option services will only have the QQQs and the SPYs or something, and or SPX, and that would be it. So that's not very useful for me in particular. But yeah, so it just depends where you are in your journey, and if you are, ready to maybe invest a little bit more per month in order to get a simplified outlook of the options activity that might help you make better trading decisions. So that's how I do it, and that's how many other people, I know Jared J uses it as well. So yeah, hopefully that helps. I'll name this account later. Says, morning Deeyana, how do you calculate your stop loss? So I have my own way of doing it in the Market Stalkers method. It is a formula that we tested over time through our own algorithms because we needed something to calculate the volatility adjusted stops, right? And there's several ways of doing it. I prefer to do it over the longer time period, so I take the regular trading hours average ranges, and then I have a formula where I would divide that by a certain number in order to ensure that my stop loss is neither too small nor too big, and then also to have enough room to reach any sort of statistically probable targets. I like to go for doubles, so sometimes singles if we're in if a range-bound day. But generally, my primary thing is to look for doubles. So if I'm risking 150, I want to get at least 300 out of my trade. And then on some days, if I see a bigger opportunity for some kind of a mean reversion trade that has enough space, I might go for a triple as well for 3R multiples. However, that's all I ask for, right? I'm not really interested in taking it to some like 10R or 50R or something like that. I just look for singles and doubles, and I'm, perfectly happy that way. If you go for doubles as your default, your accuracy really doesn't need to be that high. You can go down to about 32%, even 30%, and you will still be somewhat in profit. And then it comes down to your psychology. Are you able to trade with a 30% accuracy? Now, for me, comfort level lies between 40 and 50% accuracy. So I maintain and have maintained a very, very long-term accuracy of 43% with the profit factor floating between 1.7 and 2.3. And that's why I'm able to kind of stay in accounts forever, because it's just a stable system, right? I don't have massive days compared to the account sizes, and I try not to have, terrible days where you wipe out 70% of the account in one trade or in several paper cuts. Which, paper cuts can turn into big losses very quickly. And, entering around the same level several times, that's a big problem, right? You literally just start bleeding money and then call it the same strategy. It's like, well, it's not. You've just done 5 trades where you should have done 1 because you were maybe staring at a, 15-second chart instead of staring at a 15-minute chart and doing 1 trade. and not trying a whole bunch of trades on a tiny little stop loss, getting caught up, then sizing up to cover the loss and, all of that. Like, it's so psychological, isn't it? So yeah, make sure that your stops are like whatever you use, whether you're going to use the Marcus Stoker's method or whether you use the more normal way of doing it through the ATR. Like, for example, I know that Coach Paul uses ATR. And he will typically look at, I believe, a 5-minute chart, and then he will try to see what this ATR is telling him. And he will typically use 1 or 2 times ATR for the stop loss size. Right now here you can see it says 1.6. That's like 16 ticks for the London session on gold. Now, that's small, so he would usually double that. And, let's say 32 ticks would be a 2 times ATR for your stop loss. So some people like doing that, but I like to take the volatility over the last sort of 10 to 14 trading days rather than just 14 candles back. Because I believe, especially for London, you sort of catch that out of hours Asia session. And then if you want to carry over your trade into COMEX, the 32 tick of stop loss is not going to last you 5 seconds. One little move from gold during COMEX and you'll be out. So over time, I've realized that I needed something that will give me a slightly larger, bigger sort of view of what they're doing on a weekly and monthly volatility rather than just the previous few candles. But that's me, whatever you're using, just make sure that you are consistent with it. Again, I'm sorry about the banging if you can hear that. This is a directional mic. It shouldn't pick up that much of it, but it's pretty loud, so we're just gonna have to push through it. Anthony says, is overnight VWAP taken from the start of the Asian session? I take overnight VWAP from the open. So this one, I don't think you can actually anchor it through anything else. Just like wherever it opens, it just starts doing calculations. But you do have the anchored VWAP that allows you a bit more flexibility. So if you go to forecasting and measurement tools over here, you will have this thing. And I find that one is a little bit more accurate. I know that Coach Jay anchors it to the highs and lows of the session. That's also a very valid approach, especially for equities that love to test any sort of VWAPs and then react from it. So it's a good thing to have. But for me, I start my VWAP overnight Globex VWAP as soon as the maintenance period is over, and then it starts to plot the VWAP on the chart. And again, give it a go, but I found that VWAP is the most reactive, because we also have to have a look at what the price action is doing, not just going, oh, I like that. Does it actually react? Like, how many times do they actually test VWAP and react from it? And I found that session VWAP on DAX for London almost serves no purpose, unless it's like a range-bound day. But overnight VWAP is very, very frequently reactive, and it's an excellent long, but also an excellent short. And then if they break through that, they sort of go back into the upward bias, which would be, more conducive to what DAX and equities do, go up. So yeah, just make sure whatever you're using that you are observing and noting down how many times there was a bounce from VWAP. Does it overshoot it, and by how much? And if it does overshoot it, well, then maybe you're looking at a different VWAP, because it's some sort of volume there, but maybe you can find one that was anchored to the low or the high that they decided to test more frequently. And this would be a product by product thing. For example, gold, it does react to VWAP, but it tends to overshoot it quite frequently by about 30 to 50 ticks. So that's very different from DAX, that sometimes goes literally to the tick and then starts to come away from it, right? Wizard TP, I like your name. Can we expect normal volume with a day like today? I doubt it. purely because we are looking at a short stay first and foremost. So right away, we're not going to have, coming to the market tomorrow, looking at what the volume did today, you're going to have a whole bunch of hours missing from it. So even if we do get the normal volume for this first part of the day, it's going to cut off. So, immediately you're going to have lower volume day. And then how many people are going to be trading today? Many of them might be observing Martin Luther King Day. And then maybe many of them might just be watching the Trump inauguration rather than actively trading. And perhaps just observing the reaction that those two events will have today. I certainly don't plan to do 1 million trades today. Like if I don't see anything obvious, I'm just going to lock it up. I also have a very good friend visiting me from Los Angeles. She is originally from Bournemouth, but I haven't seen her since like before COVID. And in the meantime, she also had a child. So now her lovely daughter is going to meet me today. So it's going to be, maybe a better use of my time rather than sitting and watching paint dry to go and see a friend that I haven't seen in a very long time. So, yeah. I'll name this account later. Says, what pattern do you look for when you're looking for a setup? It's not necessarily a do or die pattern. I have a few that I want to see eventually, but I will frequently front run a trade, which might cause me to lose more often and lose, a little bit in expectation of a certain event in order to get a better trading location. And then if that doesn't quite transpire, you've seen me do that many times, I will kill it early. And then I will either wait for, a complete invalidation of that idea and then leave it alone for a couple of hours until I get more information or until we reach some other levels that I'm looking at. So I won't typically chase. I mean, not never. Obviously, I'm human, so sometimes I do chase. And, it's not like, oh, you'll never have a bad day. You will sometimes go a little bit nuts and, do stupid things. As long as you recognize that and just go, okay, that wasn't great. Next. Turn it to Ariana Grande. Thank you. Next. Right? But yeah, the pattern, I have probably, I would say about 4 of them. One is a consolidation with an engulfing finisher of some sort. So let's say this one with a bearish engulfing finisher here. So this is one of them. Let me plop a little rectangle so I can show you. If I can find the rectangle this morning. I am quite tired from the flight. I only arrived like last night, pretty late. Okay, so this would be a bit of a messy consolidation. We kind of stopped and went higher, then reversed. But ultimately what happened is that you got this big move away from the whole area. That is what I look for as one of the patterns. So some sort of a distribution if I'm looking at a level. So in the most ideal world, guys, be quiet. In the most ideal world, I would, have a test of 27.45. Then we would kind of distribute or accumulate a little bit there and then have a bullish engulfing finisher. So that's one pattern. Another pattern would be a simpler pattern, which is a 2-bar pattern. Just a simple bullish or bearish engulfing. And here it is here. But this is like right at the end of the day. So, wrong time, but this is what it looks like. And here's a bearish finisher. I differentiate those as strong versus weak engulfings as well. So I went one step further to say if we have something like this. So for example, this pattern for me is not a valid pattern. Why? Because you have a whole bunch of buying wicks to the opposite side, and that's just weak. So yeah, you might get a movement away from it, but when you have a decided move and, unequivocal, confident change of direction, some sort of market shift, that tends to be a better option. And let's see if I can find you. Maybe not go on a 5-minute chart because that can get a little noisy. But let's have a look at the 15-minute chart. Okay, so here's one. This is an unequivocal change of sentiment, even though this, I would still classify this as a consolidation with a bullish engulfing finisher. But that is what that will look like. After that, you effectively get a nice run away from that. There is no looking back, there's no nothing. So those sorts of patterns to me tend to be cleaner, and that would be something I look for. I also look for alternatives, like something like a morning and evening star. What's that? Well, it's a 3-bar pattern. Dakota talks about 3-bar reversals, and that would be one of them. But likewise, I want to see a particular thing. However, morning and evening stars to me are not that strong. I find that the consolidations with the engulfings are stronger, because if it happens during the regular trading hours, you effectively get a price agreement during a lot of volume, right? So if you're trading around 10 a.m. Eastern, which is 3 p.m. our time, and then you get some sort of a consolidation on a 5-minute chart with a reversal, there's so much volume there. It's like if they really wanted to, to push it further, there shouldn't have been a consolidation. And, what's a consolidation? It is a price agreement. Now, be careful if you're trading out of hours, because if there's no volume, it's not likely a price agreement. It's lack of activity. It's a very, very different thing. So lack of activity, random walk, not quite the same as price agreement, even though they will look similar. They will still look like consolidating things. When does the US futures close today? It will be 6 p.m. my time, which I believe is noon CST and 1 p.m. EST. Did I cover all the time zones? But yeah, it's going to be an early close. It's basically lunchtime hour close in Chicago. As soon as noon hits, whatever you've done up until then, you are done. And I know that some of the other prop firms don't even consider this a separate day. So if you're trading somewhere else, don't be surprised if your balance from today, whatever it is, minus or plus, is going to show up in your account the next day as well as if you traded on that day. I know that happens a lot on Ninja and Rhythmic services. So, yeah. But yeah, it's going to be, we might get some movement, but I'm not, I wouldn't be. There's always outliers, there's always going to be somebody who's going to make a whole bunch of cash, whether it's a quiet day or not. Someone is going to make a killing, right? But there will be a lot more people that might be expecting one type of a behavior, and then we get something completely different, and then they get cut up, they lose accounts and stuff. So let's try and not do that. So this would be the day to size down. Be a bit more careful. Take care of those accounts, Let's respect the opportunity that we have by not sizing up, but let's try to be professional. One of my big slogans is turning traders into professionals. And you have to think from a mindset of, what do professionals do? They're risk managers. They're not people who are just willy-nilly sizing up and increasing positions by 100% and then 200% and then 300% and then getting lucky and going from nearly blowing the account to suddenly having like 12 grand in the account. So yeah, that's not something that professionals will do. So let's have a plan with some sort of a position max size. Let's say if you are looking at 50K accounts, really you shouldn't be trading minis at all unless you're super experienced and to the core your system and what you're doing. And even then, you probably don't want to, go on a rampage and dig a massive hole, because anyone can have a bad day. It's all probabilities. So if we're not careful to be risk-minded all the time, trouble ensues and people lose accounts in 2 days. And, it's so sensitive. One mistake and you're out, sort of thing. Now, these days, it's great that we have that safety net, right? Even if you blow out of the live account, you can still go back to a combine, work your way to the funded level. It's not the end of the road. But back in the day, when I first became a prop trader, you really only had one chance. And if you blew it, they would just kick you out the door and say goodbye. See you later. Find a day job or something. It wasn't like this endless tries of, let's do this. So your skills really needed to be, up there in order to keep the account on first try. Wes, hello Wes, very good to see you. He says, when volatility or ADR is too low, is it smart to switch to similar instruments? Example, crude oil to RBOB or DAX to platinum. When is this feasible for a beginner or intermediate? I think that's feasible for everybody because we're all, like, regardless of your skill set and experience, we're all day traders and we all need the same thing. We need movement. Without movement, we can't make money. So obviously, if something dries up to, 70 ticks per session, that's extremely painful to trade. You might have a good setup and you enter a trade and then nothing happens for 3 hours. That will affect everybody mentally. If you also have swing setup and you spend 2-3 weeks waiting for it to arrive, and then also there's no movement and you spend the next month watching paint dry and only making 10-20 ticks, that's also something you don't want, right? So I would say that looking for an appropriately liquid product is something that everybody should be doing regardless of level of experience. Now, there are instruments that go the other way that are too volatile, and we actually had that in crude oil during COVID when crude oil, like there was this one day when crude oil went 2,000 ticks. It was absolutely insane. And in and around about that time is when they stopped, actually stopped the crude oil trading. They suspended it. They were just like, well, the futures went negative. We're not prepared for this. And we're just ceasing all trading on crude oil. So yeah. Penguin Dynasty says, you're so lucky you can trade today. I'm from Chicago, USA, and there's no markets today. Really? There is markets today, man. These are US markets. So Topstep has it. Unless your brokerage decided to close it. Like, are you talking from a brokerage perspective? AMP is still open for reduced trading hours, but I can understand that maybe some brokerages decided not to open it today for trading. But for all intents and purposes, CME is open today. Yeah, shortened hours for sure, but still trading until noon CST. So yeah, I'm guessing Penguin Dynasty probably thinks that maybe you're with the brokers that decided not to trade. But yeah, this is another reason to have some proper counts as well. How to trade English markets. Obviously, you have to have data feed. That's the first step, right? Pay for the data feed. And then have a brokerage that will allow you access to those markets. Now, most brokerages will have different futures around the world, including, Tokyo Exchange, including English Exchange, FTSE, including Eurex, which is the European exchange. But yeah, so I don't know. It's probably a brokerage that decided to shut shop, maybe because of Trump inauguration. But generally, for the Martin Luther King Day, it's usually just a shortened day, so I don't know what the brokerage is doing. TraderX says 50K. Would you recommend ES5 micro? I would actually start with 3 on a 50K because I think that even on a 5K, that's just like half the amount of the mini. And I think for the first week or two, you only have 2,000 of drawdown to play with on the 2K. Think about it. If you put 2K in your own brokerage account, would you be trading ES these days, like the way I trade and the way even somebody like Isaac R trades, we use like 10 to 20 points on ES. Would you be risking, so let's say that's 40 to 80 ticks. And let's say that you are doing micros. would you be risking 500 per stop loss per one trade on your account? That's a quarter of your, that's 25% of the initial available drawdown. Would you be risking that much? I wouldn't. I think that's a ludicrous size. And you know how, like, let's take a look at it from a risk of ruin point of view. If you lose 4 trades on the bounce, which can happen easily, right? We always have to work from a worst case scenario, not the best case scenario. If you lose 4 trades on the bounce, you lose the account, you lose the combine, and then you have to reset or start again if you were in an XFA. It's a lot of money, right? 25% of the account is a ludicrous amount of size. I usually say to people, divide that maximum loss limit by 10, or if you have the daily loss limit, still divide that by 10, and make that into your personal daily loss limit. You know, that's like, there's still a lot, because you were not supposed to do it per trade. It's supposed to be per day. So you still have to, if you're going to trade 4 or 5 times a day, you have to fit in those 4 or 5 trades into the, you know, $200 risk limit that you gave yourself. And that's the only way to do it safely. You know, yeah, you can do it like a lunatic. You can kind of get lucky and just go, right, okay, full port. But that's the main reason why people blow up accounts, right? They're like, oh, I passed in 2 days. That's not good. I know we can pass in 2 days, and it serves a purpose of, you know, if you are already an advanced trader and you have a lot of experience, you don't need to spend a lot of time in combines. You know, it serves absolutely no purpose for you. So it's a good thing that we have the ability to just, you know, get back to the funded level super quick. But if you're not there yet, and if you can't hold on to your accounts for longer than 2 days, a week, even 2 weeks, or even a month, that's a very short amount of time, that means you're sizing up too much. Now, I know that everybody wants to be rich yesterday, but you've got to start slow. You know, for the sake of the first couple of weeks building up that cushion, we need to change the objective to go, I want to get a payout. I need to get over 200. No, I need to keep the account. I've got the account. Now I have to keep it. How do I keep it? By not sizing up immediately. There's a time to size up, you know, just build some of the cushion there. Build some cushion. And then if you want to take a payout and you don't have that much cushion in it, but you're eligible for a payout, you don't have to take 50%. You can take 30%. The more important thing there is to maintain the account. So if you have, like, let's say if you have 5 days of over 200 and you're sitting at $1,200 of profit, is it wise to leave your account at like $600? No, of course not. So it's like, yeah, take a payout, but take like maybe 200 or 300. Don't take the full, you know, 600. Maintain the account. Make sure that you know how to leave yourself a few swings at the bat, so that you don't blow out as soon as you took a payout. So, you know, some of those things, they're like accountancy things. They're not even trader things. They're literally like, how do we manage accounts? And it's exactly the same as anything else. If you have, you know, $1,000 left in your personal account, not the brokerage, but actual bank account, would you go blowing it on like 600 to go like, oh, I'm just going to buy something, some new gadget or something? Would you? And if you do, I would argue that's really not a great way to run your finances. But, you know, there's like a real life application there. If you don't leave yourself, like, do you know what sort of drawdown your system has in your approach? Like, how much drawdown can you suffer? How much money do you need to leave in there to actually be able to trade with it? It's called working capital. Do you have enough working capital in your account to keep going? Or is your risk of ruin even higher now? Because now you have to risk, you know, either peanuts or the same amount and be at risk of losing the account altogether tomorrow, right after the payout. You know, common sense, isn't it? So I would start with 3 micros, 2 micros, 3 micros, just to build, you know, to get used to it, you know, start a bit of a cushion there. And then once you're over the drawdown limit, because there's like maximum drawdown that stops trailing after you go into 2,000 profit on a 50K. Then you can size up to 5 and then trade with 5 until you have like, at least, really, I would say at least 10K in there. I wouldn't go over that because I've just seen risk of ruin that happens like in a split of a second. Right, so we touched the 2745 gamma wall. We have a bit of a reaction here. Let me add another chart here so that we can drop down to a lower time frame and see what they're doing. Let's see if they can maintain this move. So we technically now have a potential for failed downside auction, so long from the gamma wall. Let's do a little tiny micro, and I'm going to use a 35 tick stop here. Let's see if we can get some movement upside. Aiming for double that, so going double, 70 ticks. And let's see whether they're going to actually kick into gear or not. And then if that doesn't actually have any traction, that's probably going to be the only thing that I trade today. But yeah, gamma wall, some reaction, failed auction, long potential, aiming for 70 ticks. I'm just going to do my little modified fib tool over the other side. So I can keep an eye on it without any... See, this is what I like doing. I basically put a modified fib tool with 1R, 2R, 3R. And then I just watch how much drawdown this suffers. Because for some reason, this doesn't give me, especially if I'm on a very low time frame, this doesn't give me enough feeling, like enough feel to actually run a trade without any emotions. It's ticks, yes, but somehow, I don't know, I want to know where my 1R, 2R, 3R are, and then, I can kind of sense better how much drawdown I'm in. It's a bit difficult to explain, but I don't know, for some reason this fib tool has been like my pal for 18 years, and I absolutely love it. It's very simple. I just hack the regular fib numbers to reflect the size of the stop, and then 1R, 2R, and 3R, and that's all I have. How can crude oil be worth -0? Yeah, well, that was the question, right? So the futures went negative. It's because it's a derivative. It's a derivative. It's not an actual commodity. So it's not that the crude oil itself was worth -12. It's that the futures went way negative, right? And futures are supposed to be, you have the premium market, you have the normal market. So you have contango, which is when the markets are trading normally, meaning futures should be trading higher than spot. And then you have backwardation, when the futures markets are priced less than the spot market. And usually that corrects itself pretty quickly. However, during COVID, we went into an extreme backwardation, and that's what caused the futures markets to go into negative, and none of the brokers were prepared for that. They were all just flabbergasted that it was happening, and that's why they stopped trading, right? They were like, well, our systems are not designed to take negative. Like, we didn't even know. In fact, in the Series 3 guide, which is an old, they're old people. They've never seen that, and they haven't corrected it either. In the guidebook, study guide, it says futures cannot go negative, and I was like, really? Because I've seen them go negative. It's like, what gives, guys? Can we update these, maybe? But yeah, for all intents and purposes, it shouldn't have happened because it was a black swan event, and it did happen. The demand for crude oil completely plummeted. like nothing we've seen ever before. And we had negative futures. That was interesting. Sushim says, what is the best time during the day to trade commodities? That will depend on your strategy. I prefer to trade them after 3 p.m. my time, which is after 9 a.m. CST and after 10 a.m. Eastern. So if I can't trade then, I will then avoid the lunchtime and come back for my 6 p.m., which is 1 p.m. Eastern, if you're in New York somewhere or surrounding areas. Why? Because you get yet another reversal into the settlement. But if you're trading gold, gold typically settles right after that, so half an hour after that. Crude oil carries on for another 90 minutes. So if you're looking for something to trade later on in the day after lunchtime, crude oil RBOB would be your best bet. And even natural gas, they can move quite a bit because they settle at the same time. So yeah, I don't like trading commodities, particularly at this time of day. And, it's rare that we get the move that I want to see immediately. And in fact, it's always really slow. Like these sort of trades, they tend to take, even if they do what they're meant to do, they kind of take like 3 hours, effectively until the overlap starts, and then they kind of start moving. I'm not a scalper. I look for 70 to 100 ticks. I do not look for 5 to 10 ticks. I'm not interested in taking 5 or 10 ticks. It does absolutely nothing for P&L or for anything apart from making me work more, right? And it's just like a pointless exercise to me. But, there are people who like taking 5 or 10 ticks. I don't. I just don't. I'm not that kind of a trader. Thoughts on platinum? I haven't looked at platinum today. I thought that it really dried up last week. So I'm going to have a look at the volatility. So let's see ballpark where that is. Metals. Yeah, so platinum is kind of floating around 26 volatility, and it's acceptable, but I would really like to see it a bit higher than that, because platinum is similar to to me, this is very range bound. So one thing immediately that is jumping out here is that VWAP is flat. So it's like, oh, yuck, vom. As soon as VWAP is flat, it means that there's no committed movement in either direction there. You have to have that VWAP slope somewhere, okay? Either sloping upwards or sloping downwards. If you don't have it, it's just a quiet market. So we're going to stick away from platinum. I don't have a thought on it. I didn't look at the levels, and I'm not particularly interested in trading platinum today. If it livens up again, that would be great. But Marcus says, what makes the auction failed? Okay, so let's have a look at it. It didn't fail yet, but it's spending a lot of time back inside the initial balance. This is one of the examples where I'm trying to front run a trade from a level that I have. So this was the initial balance, the high and the low. So let's do a white line just to make it a bit more obvious. So it hasn't failed just yet completely, because a complete failure signal, trigger signal, would be when a 30-minute chart closes back inside the first hour of trading range, which is known as the initial balance, and we take that as the range of high and the low from the first hour of trading. When we exit that, and then we cannot get like a proper committed move away from it, and it pulls back to close the 30-minute time frame back inside that range, that constitutes a failed auction because they tried, they couldn't find business, they came back, they closed it. Now, we don't have that yet. This is what I mean when I say I like to front run things. Because if I do get a committed move, instead of waiting for a full 30-minute close, that might end up all the way rotating to the other side and end up at 27.52, in which case my setup is not there anymore. Like, there's no profit margin. So what I try to do, I try to have another level that should behave a certain way. In this case, I have a gamma wall at 27.45. So if we manage to stick above that, and if we manage to get committed buyers, and eventually in about 5 minutes time to close the 30-minute time frame back inside initial balance, I will be in a better position than if I was to wait for the full trigger entry to happen. Okay. Now, some people like to use a 15-minute chart to look for, these kind of setups. I find the 15-minute chart not relevant enough for that. So I will use a ribbon to see whether we are having a change in sentiment on a very low time frame. And then I will attempt to front run a trade. But I only do that if I have another level in mind. Like, for example, here I have the gamma wall. So what should happen there statistically is to get some buying. Now, obviously, every level can break down. And if that does happen, I'm hands off until we're much lower down, right? I don't have anything else to do because there's no level until further down. But if it does work, it gives me a better risk reward profile. So instead of me catching it at like 27.49 or 27.50 when the 30-minute chart actually does what it's supposed to do, and me only grabbing 30 ticks, I would rather, lose a little bit, on the smaller size, trying to front run a trade and then get the big 2R, than have like the prospect of only ever making like barely 10 ticks because I waited for the 30-minute to close back inside IB. So that's how I know that it's failed. You look at the signal. If you get no committed movement below the initial balance and we keep hanging inside it, and we try to get outside, and it's just not happening. It's not happening. Eventually, you will get the other side coming to the party and going, hey, nobody wanted to take our price below the, whatever it is, 27.45.8. Because think about when you're in an auction, proper auction, and somebody's going, 27.45.4, do we have a buyer? If we want to do like proper auctions, right? Everybody's silent. Do we have a seller? Do we have a seller at 25? No, nobody's interested in it. Okay, do we maybe have a buyer at 27.47? And they're like, yeah, okay. And that somebody else might be thinking, well, actually, I don't even want to sell it until we get to 27.52, 53. So if somebody goes, well, do you want to sell it at 27.45? They'll just be like, hell no. No. So, the auction fails because they can't find business below that point. Therefore, buyers step in and they take it. So that's the whole point of the failed auction. And it comes from the pits, it really comes from the pits because you had a whole bunch of people that are trying to talk and agree on the price, where they want to buy it, where they want to sell it. And if it fails below a certain level and you turn around, it's a failed auction. But there is there's more to it. It's not just that. For a proper failed auction, you have to have a nice push of volume in the opposite direction. If you get a failed auction where we just like dry up inside initial balance and there's no movement, that's not really a proper failed auction. It will be more conducive to a range-bound day, and that will change my target to the 70 ticks to just a single 35 ticks. So I wouldn't be looking for a bigger move because nobody's moving it anywhere. It's just like, meh. And then all you expect is just a return to the mean, which will be the middle of the range. And on most times when that happens, that's the only thing you can expect. So yeah. Somebody's scratching to get out, but it's a no. How do you find these gamma wall levels? I know you have your indicator, but it's not my indicator, it's actually a mental Q indicator. It is based on options levels activity. So option levels do change intraday, but for some of the more alternative markets, they won't change that much. Like they might change, let's say, in platinum, we had 975 as a level of interest for a long time. It was there for like 2 weeks. So back in October, I was using 975 as sort of my pivot point almost to either run trades to it or from it. But for something like NQ and ES, you have levels that are constantly changing. Sometimes you even have intraday gamma flows that will change where the calls and the puts are located. But that's what it is. It's basically options activity and what the options players are expecting. You can see how many calls are there, how many puts are there. Are we actually finding more buys away from those levels, or are we kind of trying to dip back there in order to hit the strikes and all of that? So it's just options levels. That's all it is. And I know options levels might be a little bit more complex for some people, but when you're using it in this way, it's literally just to see where the market makers might get involved in order to hedge their own positions. And these are the levels that they usually get involved in. Sometimes they will break through them. Other times they will bounce quite significantly away from them. The very first statistical probability is that they will react to the same side. So you touch it, we've already gone over it. It was a call resistance. And if there's more call buying, then you will be seeing further upside. If that doesn't happen, then obviously you will see a breakdown of the level. But it's definitely worth it because, especially in ES, these days we have something like 50%, like 53% of activity, price action, comes from the options activity, and 0DT options in particular. Now, 0DTs mean that you are buying an option with 0 days to expiry, so you're buying it effectively on the same day that it expires. And that drives a whole bunch of retail investors to, want big profits very quickly. But it's gotten so big that it started to affect intraday market movement, right? Before, you didn't have that many people doing 0DTs, so it wasn't that relevant. And same thing has happened in crude oil as well. We now have bi-weekly options that are comprising, I think it used to be 15%. Now we're kind of knocking on about 35% of options activity driving price action intraday. It's like, it's really changed in the last sort of 3-4 years. And if you're not going with the times, then you're just not adapting as a trader. And, the job description here is to adapt, see what works, see what doesn't, adapt, carry on. That's how it is. All right, let's take another question, and then I'm going to be out of here. It is going to be just an hour today. Algo trader says, is the initial balance for gold Frankfurt open 7 to 8 a.m. UK time, and is it different from New York open? So for gold specifically, they consider the London Open as the start of the exchange, regular exchange hours trading. Frankfurt bears no relevance on anything other than Eurex products, which would be Bund, which would be DAX, so those kind of Euro-specific products. Whereas gold is more like, you have the LME, London Metal Exchange, which is now, for all intents and purposes, closed, but it was the biggest metal exchange in the world at one point back in its day. So London hours are considered the session for gold over here. When it comes to COMEX, obviously that will be different than the cash session for equities, and it starts an hour earlier. So if you're over here, UK time, gold COMEX typically starts at 1:30 p.m. and goes until 2:30 p.m. And then at 2:30, we have the cash open, right? So it's a whole hour earlier that you get a lot of movement already starting in gold for the regular trading hours. Definitely different. But when it comes to the London session, unless you're trading Euro-specific products, it's going to be 8 a.m. for gold. specifically. And, even for DAX, I mean, Eurex, like Frankfurt is such a small exchange that when London opens, it just obliterates whatever whatever Eurex has done. I actually have a setup that I used to do on currencies when they were moving a lot. I used to call it the Frankie fake out. And you get that sometimes, not a lot, but you get it about 30% of all the observable days. You still get that happening in certain products. Typically, it doesn't happen in DAX much. DAX, I think it does it about 28% of the time, so even less. And primarily it's because it's a very very quiet product for Asia, so you don't even, you don't really get much movement until London really starts trading. However, when it does happen, you will see Frankfurt make an attempt at moving it one way, like let's say short, and then as soon as London kicks in, they go long. And that's that kind of fake out that some exchanges like to do. Nikkei likes to do that for Tokyo Open, for midnight, UK midnight. And that's, if I'm going to do a Nikkei trade, that is the time that I will be looking for a gamma level or something, or a supply and demand area, anything that would give me that initial fake out and a reversal. And that sort of sets the tone and the direction for the rest of the Tokyo session. That's how I catch some of my Nikkei trades. All right, guys, I'm going to finish it up here. So I'm just going to throw you some links. Obviously, we have, oh no, I managed to get kicked out of this. So let me just redo that. It's very annoying when that happens. I should probably create an account that will not do this. It basically knocks me out of Google and then I have to re-log in. And that slows me down, but here we are. Live and learn. Okay. Here we go. Traders who have reached over $5,000 in payouts. You can request, if you're in the US, you can request your hat and badge for the payout club. And if you are still looking for help, coaches, we've hit 100,000 members in Discord, and that number continues to grow. It continues to grow. It's crazy, right? So if you're not already a part of the Discord community, come on in. Come and hang. Inside our Discord channel, you're going to get like-minded traders. You're going to get coach-specific rooms. And obviously, a quick help if you need it from one of our ambassadors that keep a pulse on any new developments, whether it's TopstepX related, Rhythmic, Trader Rate, or just a general help section where you might be able to actually get through to a human rather than Windy. That's definitely useful. And finally, if you're looking to come and trade with us, fill this casting call form, and then Dolby is going to have a look at it. You might even have to make a video, but yeah, come and join us for a bit of banter, a bit of live trading, and just general hanging out on TopstepTV. We would love to see you. Anyways, guys, I'm going to finish it up. I will see you again tomorrow for the London session. And also, I believe I'm going to be on at 7 p.m. our time over here. So that's 1 p.m. Central on the main broadcast. So I'm going to be hanging with the guys. And again, we're going to be doing some trading and cracking jokes and all that good stuff, right? I'm going to go off because the roofers are still in the house. My puppies have been very, very good. They didn't really make much noise. They tried once and then they've just been asleep for most of the time. But unfortunately, the roof banging is going to continue all this week. So I do apologize in advance for any noise that you'll have to withstand during my live streams. But it won't last long. It's just going to be for this week and then we're back to normal. All right. Thank you for hanging with me. Make sure to click like. Make sure to click subscribe. And I will see you tomorrow. This has been the London session on TopstepTV. I'm Deeyana Angelo. Take care.